What we're doing is we're going to be planning an update to the Beacon score that you receive through the More Web and through the expert portal. So what I'll be doing today is to talk to you a little bit about the upgrade, the reasons why the upgrade's occurring, and some of the differences around that. Over and above that, just as a heads up as well, this soft copy will be shared to you from AMBA so that you will have a copy for yourself for future reference. So I'm going to get started right now. So in summary, what we're doing is, as of June 1st, Beacon 9 will replace Beacon 4 in the mortgage industry, and this is for all files delivered through the Expert and the More Web platform. The pricing for the new Beacon score will be moved from 45 cents to 70 cents for the newer score, and this will be the new standard across the board for all brokers and all lenders in the industry. So there's not going to be any more Beacon 4 available. It will be Beacon 9 across the board. Now, Beacon 9 itself, just for everyone's information, is the latest version developed by FICO. So it is very similar. It is a delinquency score which you are very familiar with in regards to predicting the likelihood of going past 90 days. But one of the key significant differences with Beacon 9 is it is adding new information because it is really a model that was created in the later years of 2009 to 2011. So the key information that is being added to it include mortgage trade information and telco trade. So now, with Beacon 9, if somebody is or has mortgage trade or telco trades, it will either affect their score positively or negatively, depending on how well they are working on those trade items. A lot of the other items that you'll see between Beacon 4 and 9 are going to be very similar because they are going to be scores from 3 to 900. And again, these are representative in regards to how your consumer's credible history is and their credible worthiness is. Some people wanted to know a lot more specifics in regards to 9 versus 4. So as you can see, the challenge around Beacon 4 was it was really an older score. This was a score that's typically about 15 years old, and to this day, people are saying that it's not as indicative of a score to measure their end consumers. So that is why we're moving to a Beacon 9, which is the latest version, which was finalized and developed in 2011. As we said earlier, Beacon 9 incorporates the mortgage and telco trade information, whereas Beacon 4 did not. Another key item in regards to data, Beacon 9 also includes separate treatment of a line of credit from other revolving credit instruments. Beacon 4 used to incorporate line of credit in all the revolving complete, whereas Beacon 9 isolates that and separates that and does separate treatment on that. So score range, again, very similar. But one interesting point between Beacon 9 versus 4, there is what we call a higher or wider distribution rate. And what that essentially means is you're going to have more higher and lower scores. So essentially what we're doing now is it's not as gray anymore with Beacon 9. If somebody is really not performing well in regards to their credit scores, excuse me, then it will be shown on the Beacon 9 much more clearly. Whereas if they are doing well or performing well on credit, it will be shown as a higher score. So that's what we mean by a higher, lower, or scores, or sorry, a more higher or lower score than Beacon 4. Now, in regards to the 4 versus 9, there are a lot of similarities, though. Again, really the key difference is with Beacon 9, there will be the inclusion of the mortgage and the telco trades. So what this ultimately does, though, is actually increase what we call the hit rate. In the past, where maybe you had a credit file or you had a consumer that you couldn't get a score from, with Beacon 9, because we're including more data and more information, you actually will improve your hit rate or being able to get a credit file and score. So that is certainly one of the vast improvements when we move from Beacon 4 to Beacon 9. As far as the categories of predictive variables, very similar to 4. What happens is, as we've talked about in the past, your payment history, your debt, your credit history length, new credit and credit mix are all components of the score, and these are going to be very similar. But with Beacon 9, they're treated just a little bit differently in regards to how the score is created. New reason codes. Going into the new reason codes, really, these are the 4 codes that you see on your score. So there will not be a difference in the sense of there will be 4 codes or reason codes, but you will see additional reason codes because they will include items such as telco or mortgage trade information. So if it says something in the sense of mortgage trade has been negative, vastly negative, those will be new reason codes that you will see on the Beacon 9 files. Another key item with Beacon 9, it evaluates at what we call the trade level rather than at the consumer level. So what it does is, in regards to Beacon 9, because it is a newer score, it is much more intelligent as far as the analytics go. So it can actually identify an isolated account which is seriously bad, and it can treat it less seriously. So say, for example, you had a trade item, maybe it's a phone bill or something, and there's been substantial disputes upon that phone bill. It will not take that phone bill and that negative rating and lump it into everything else as large or as to the effect as Beacon 4 did. With Beacon 9, as we indicated earlier, it can take isolated accounts and understand that, okay, this is an isolated account compared to the rest of the account or the rest of the credit history, and as such, it will treat it accordingly. Between Beacon 4 and Beacon 9, though, there is also, based on research from FICO, the thin files themselves have now taken on a higher or riskier approach. So what that means is if you have a thin file, and a thin file would be an end consumer that does not have much credit history, if they have negative points, it will actually be taken at a higher weighting. And as such, thin files will be scored much riskier than somebody who has a thick file. So that is a key item and a difference between 4 and 9. So if somebody has a thin file, they would be best to ensure that they're doing things very cleanly, because they will be affected more greatly than a Beacon 9 overall when we talk about thin versus thick files. Now, another key point here, we do talk about retention period, buffer windows, and dedupe windows, but the key item here that majority of brokers and lenders are concerned about is what we call the dedupe window. So let me refresh your memory. On a dedupe window, what that essentially means is, in the mortgage industry as well as the auto industry, there's an expectation that a consumer is going to be shopping around. So when they're shopping around, what happens within the model is that essentially all the mortgage inquiries are actually treated as one event on the score. Yes, all the inquiries will be posted, so if somebody were to go out to 10 different brokers, you would post all the 10 different inquiries. But from a score perspective, if they were all done within 14 days for Beacon 4, they really would be treated as one event, and as such, it does not affect their score greatly. So this was perhaps a myth that a lot of perhaps brokers or end customers were concerned about, was pulling their files too much. But now, just for clarity, it certainly is not the case. Now, to further extend upon that, if you look at Beacon 9, the dedupe window is now 45 days. So again, understanding that the times have changed and that people are shopping maybe a little longer, the dedupe window is 45 days. So what that means again is within the 45-day period, regardless of the number of inquiries that a consumer has specific to the mortgage industry, they will be treated essentially as one inquiry. So again, this allows your consumer to do whatever they feel appropriate in regards to getting the best deal for themselves in regards to getting a house and a car as well, but certainly in this case we're talking about mortgages. I've gone over the high level in regards to the comparisons between Beacon 4 and Beacon 9, but some people are a little bit more analytical, and there's some statisticians online. So what we do have included in this presentation includes some of what we call the KS values. So I won't get into great details on this, but the essence of it is really when we look at the new scores, they do show higher KS values, which ultimately means basically that they are much more accurate in regards to the predictability of the creditworthiness of the consumer. Over and above this, we also have inclusive some charts as well, but that'll be in the appendix, where if you want to look into the actual numbers and details, we do have that available for you as well. So again, in summary, key things between the two, Beacon 4 and Beacon 9, again, the ranges will be similar, 300 to 900. And quite frankly, the scores should be fairly accurate, and everybody is going to ask, well, what's a good Beacon 9 score? I mean, the essence of the score should be very similar, but what we're saying here now with Beacon 9 is you're going to have a much more accurate score of your end consumer. As you can see here, the key item to emphasize is, again, the mortgage and trade, telco trade items. A quick point of clarity, in Beacon 4, we did identify the inquiries, but they did not affect the score. But moving to Beacon 9 on June 1st, this will have an effect, be it positive or negative, for your consumer. And again, some other items, other key items is really, again, development data. The reason and the main reason we are moving from 4 to 9 is really what was required in the industry was a newer, more accurate score. So using a score that was 15 years old really was not working for the industry, for all the different stakeholders. So we are moving towards the Beacon 9 for the whole industry. So as indicated earlier, and again, I won't get into too much detail, but for those out there that really look at the analytics, we have that for you as far as the scorables and the different types of scorables between Beacon 4 and 9. And as well, for example, on account management, this is a classic example where if we were to pull the millions and millions of Canadians when we were scoring a 9 versus a 4, as you can see here on this slide, 1.5 million more Canadians would be scored using a Beacon 9, and hence why it would really improve the industry if we could get a credit score to you so that you can continue on with your process. So overall, those are the key items in regards to the Beacon 4 versus Beacon 9, but I just want to re-emphasize we have notified the industry essentially that the changes are coming. We've given fair time for June 1st for the launch. But again, just to reemphasize, this will be the new standard, and Beacon 4 will be taken out of the mortgage industry.